Hey everyone, and welcome back to MSTR Daily. My name is Matt, and in this video, we're going to review the historical convertible bond that MSTR just issued. Then we have to discuss Microstrategy's valuation and see what so many people get wrong when they look at this company. And also, we are starting a new segment for the next few videos called the QQQ Update. With the NASDAQ 100 index screenshot date set for November 29th, Black Friday, we will be updating the current ranking and initial flows we could see. But before we get into it, check out MSTR Pro, which is a paid group where I disclose and explain my personal Microstrategy options portfolio. In the last MSTR Pro video, I explained what I would do if I were starting over with 100K. So if you want to see that, you can check it out with the link in the description. Okay, for our first story today, we need to go over the massive details from the most recent MSTR convertible note offering. And if you're new to the channel, I'm sorry, with MSTR, it is imperative that we talk about bond details because ironically, it is one of the most exciting stocks in the stock market because it sells volatility to the bond market. Anyways, yesterday they announced this offering for 1.75 billion at 0%, and this morning, Saylor posted the pricing and revealed that it has been oversubscribed to 2.6 billion with a conversion premium of 55%. This is the best convertible bond that MSTR has ever issued. And by the way, that conversion premium is based on a stock price of $433. So based on what Sharish posted here, the strike price is $672. So now that this new convertible note has been issued, this is a look at the current capital structure for MicroStrategy, and this is what we have. MSTR currently has 6 convertible bonds outstanding at a blended interest rate of 0.5%. No, you heard me right. It's only half of 1%, which is only $34 million of annual interest expense. Because these are convertible notes, the number of shares that are convertible is 28.5 million. And when we look at the debt to Bitcoin ratio, we stand at 21.88%. But as Bitcoin rises, that ratio drops very quickly. It seems that MSTR likes to keep that value at or below 25%. So we could easily see another convert of this magnitude before the end of 2024. So now that this pricing has been announced and MSTR has likely been raising cash this week, I wouldn't be surprised to see an announcement on Monday morning about a 30 to 40,000 Bitcoin purchase from both debt and equity. MSTR is in stride and executing their strategy perfectly right now, and the stock price is reflecting that. I've seen a lot of posts and comments about how MSTR is overvalued, but it's been trading in the same range of like 3 to 4x MNAV for a few months now, and with NASDAQ inclusion a few weeks away, I think we could see that creep up to 4, but we'll have to track how that evolves. Dylan Leclerc from Metaplanet posted this: "The bond market is fully open to Bitcoin this cycle, entirely different than 2021. Preston Pish chimed in and said this: "When you're selling the best performing debt on the planet, these things happen." And Jeff Park, one of my favorite analysts, posted this, explaining the absurd nature of MSTR convertible notes. Quote, "Just to put this in context, most credit deals, if lucky, get upsized 15 to 20%. 50% is unheard of, no less in the billion issuance category. Unreal." And now that MSTR is in stride, many of us MSTR bulls on Twitter were wondering when the famous WallStreetBets investors would arrive, and I'm excited to announce that they have. However, instead of buying max out of the money 0 DTE calls, they are buying puts. I'm not kidding, they are trying to short MicroStrategy right now. I'll throw a bunch of the screenshots on the screen right now for you to see, but they have clearly not grasped the value proposition here because a lot of them are simply comparing the Bitcoin on the balance sheet to the market cap and thinking that it's wildly overvalued. But I'm sorry to report that MSTR has actually been trading within its fair value range over the last few months. When you accurately calculate the multiple to net asset value by including the liabilities, they have been bouncing between a 3x and a 4x multiple. The reason why the stock has gone up so much is because their main KPI, the Bitcoin yield, has increased to over 40% on the year, and it could easily go over 50% by the end of this year. So with a lot of new Bitcoin purchases and with the value of Bitcoin going up, the stock is just reflecting this new reality of MicroStrategy's inherent value. And that's something that a lot of people have a hard time with. How do you value MSTR? And Michael Saylor has even chimed in on this conversation recently because I think he's getting just as annoyed as we are at the people who think they need to trade at par with their Bitcoin holdings, which is just dumb. It's just the laziest analysis I've ever seen. Friends don't let friends put out lazy analysis like that. Anyways, Saylor has talked about this 2 times this week, one in a podcast on Monday, and the second time was last night on an X Spaces with Senator Lummis. So watch these 2 clips, and while you're watching, comment below what you think MSTR's fair value is. But don't tune out after the clips. We still have to talk about the massive options volume on IBIT and cover MSTR shooting up the QQQ rankings before inclusion. Okay, watch this.
Michael, there's a perception that your stock trades at a premium to the intrinsic value of Bitcoin that you hold in the core business. Is that your view? And if so, what explains it? Is that the Saylor premium?
No, that's only a perception of people that haven't been paying attention or don't really do any research. If you actually logged into our earnings call, or if anybody studied the company, that's kind of like saying there's a perception that Microsoft trades at a premium to its underlying assets. Well, yeah, it does. It trades 50 times greater than its net tangible assets. So does Apple, so does Standard Oil, so does every operating company. So the myth, right, the misunderstanding here is people don't understand what our operating business is. Our operating business is a treasury operation that's securitizing Bitcoin. And the primary use that we offer to the marketplace is we offer high volatility, high leverage equity, like 2x Bitcoin in the equity or 1.5x Bitcoin. And that's very valuable. If you're an options trader or you're an investor, you would rather have 1.5x or 2x leverage on the equity. And the way that we create that in a systemic fashion is we strip the risk, the performance, and the volatility off of Bitcoin, and we sell fixed income instruments to the fixed income market that can't buy Bitcoin and doesn't want the equity and doesn't want the volatility. So when we sell a convertible bond, we sell a convertible bond at a premium. We might sell $1 billion bond, and we would probably capture 750 million or more in the arbitrage on the day we do the deal. And then if we hold the bond 6 years and Bitcoin goes up 21% a year, we make $3 billion on the back end. So we generate $3.7 billion of shareholder gains by arbitraging the duration on cheap capital with the return on a crypto commodity. And the people that bought the bond can't buy Bitcoin. They're convertible arbitragers, or they're fixed income investors, or they're institutional investors, or they have capital tied up in a 401k retirement plan. So if you understand those things, you realize that, it's kind of like, and I use this analogy, Jan, it's like if you looked at Standard Oil and you said, well, the company seems to be trading at a premium to the oil reserves. Well, no joke. That's because the company has a refinery and it creates kerosene. You ever try to put crude oil in a rocket, or crude oil in a jet, or crude oil in your car, or pour crude oil on a highway? The point is, you can't. You need asphalt, you need gasoline, you need kerosene, you're refining it. You can't do the refining without the reserves. So the Bitcoin reserves that we have a practical use. The use is they're collateralizing the fixed income instruments, and then they're creating volatility and performance for the equity instruments, which feed the option instruments, which create the volatility. And all of those things together mean that we're just kind of like a transformer. You got 480 volt 3-phase power coming in one side of the property, and on the other side you want to run your daughter's hair dryer, or your or your washer and dryer, or your electric heater, or and
I think
we're stepping it down.
Most 3-phase electricity will blow out the hair dryer, but I get your point. I think it's
I'm actually making the point that 3-phase power is what I use to run my 500-ton yacht, but there's a massive transformer that steps it down, from the street. And what Microstrategy is doing with its capital is it's transforming high voltage Bitcoin into low voltage securities. And so that to focus upon the premium is completely missing what's really going on here. And I'll give you one more number, which I think is pretty important, which is, today, if you look at my tweet, I just noted we generated a yield of 41.8% this year, which is the equivalent of 79,130 BTC. That at 90,000 something a coin, that's $7.3 billion. And so if I didn't tell you what we did, and if I didn't tell you how much Bitcoin we have, and the only thing you knew about my company was we generated 7.3 billion in earnings delivered in Bitcoin, and we're growing more than 75% a year, how much do you think the company's worth?
Tremendous amount.
Yeah,
I think that's a great.
And then you would add in the Bitcoin position. So So
Right.
really, the people that are focused on the premium are ignoring the fact that that's a company generating billions and billions of dollars of shareholder value a year in hypergrowth mode.
Why would you give your money to MicroStrategy to invest? So why not just go do it yourself and buy Bitcoin? This is because some can't do that, right?
Well, there's a lot of answers to that. One is, can you borrow $1 billion for free for 5 years with no recourse and unsecured? Probably not, right? Like, individuals can't borrow money for free for long periods of time. It's difficult. Companies can. So one reason why is because we can borrow $4.2 billion unsecured for a long period of time and pay less than 1% interest. So when you're investing with us, you're not just getting the Bitcoin, you're getting the access to the company that has the cheapest cost of capital. We probably have the cheapest cost of capital in the entire market. Like, if you look at every S&P company, if you look at every company in the market, who else can borrow billions of dollars for less than 1% interest?
And if Saylor's explanation didn't convince you, here's Pierre Rochard from Riot. Microstrategy is securitizing Bitcoin. Risk transformation and securitization means de-risking fixed income investors by giving them priority in a cash flow waterfall, increasing risk for residual equity that gets paid last. This risk transfer is efficient if assumptions about the underlying collateral asset pan out. While traditional securitization has a life cycle for the entity, an illiquid equity tranche, man, that is a hard phrase, and uses collateral like mortgages or auto loans, MicroStrategy is doing continuous dynamic securitization with liquid, publicly traded equity, spot, and options, convertible bonds, and Bitcoin collateral. These treasury operations have created accretive value for shareholders in Bitcoin terms and will continue to do so until the fixed income market is saturated and unknown ceiling. So wow, that is a lot of information, but the point is MicroStrategy has a very unique position in the market and they are not a closed-end trust. They don't need to trade at par with the underlying Bitcoin. They will trade at a much higher multiple above it. Okay, I have an update from yesterday's video. Yes, options did launch on IBIT and we have some numbers on how big of a day it was. James Seyfert posted this. Final tally of IBIT's first day of options is just shy of 1.9 billion in notional exposure, traded via 354,000 contracts. 82% of them were calls and 18% of them were puts. So these derivatives clearly have high demand, and I think it's obvious to say that the open interest will continue to climb on IBIT. But the big question surrounding IBIT options is, would they take attention away from MSTR? This is what Jeff Park said about it. Many people thought that the launch of IBIT options would curtail options trading in MSTR, but today would have proven you completely wrong. In fact, MSTR's vol decoupled with Bitcoin meaningfully in the last hour, where it closed even higher than where we started in the day. We'll need longer of an observation period to see where we stabilize, but one thing so far is clear: MSTR is in its own league. Overall, options trading on IBIT is good for both Bitcoin and MSTR. Okay, for a fun segment here at the end of the video, we have the updated ranking for MSTR in the QQQ. With this massive pump, MSTR has cleared a $100 billion market cap, and at the time of recording at a $480 share price, we are sitting in spot 37. This leads to over $2 billion in initial flows from funds that track the NASDAQ 100 index, the largest being QQQ and QQQM. And that also means that MSTR has breached the top 100 in the S&P 500 index, and at this point, it's eyeing the top 10 by the end of 2025. But the short-term target is November 29th of this year for the NASDAQ 100 screenshot date. The higher the market cap, the more capital will flow in during the first few months of December. So we are rooting for top 25 right now. And with that, if you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.